The impact of Federal Reserve rate cuts on the global economy and markets. In 2024, the Federal Reserve began its first rate cuts since the pandemic, reducing rates by 0.5% in September and 0.25% in November. This shift comes as U.S. inflation decreases and economic growth slows. The Fed is expected to continue cutting rates into 2025. Impact on markets. Stocks. Rate cuts usually boost stock prices, especially during economic recovery. However, during recessions, stock markets may not respond right away. Bonds. Bond prices rise when rates fall due to the inverse relationship. Commodities. Lower rates can weaken the dollar, pushing up prices for commodities like gold and oil. Cryptocurrency. Cryptos, such as Bitcoin, saw strong gains in 2020 and may serve as an inflation hedge. Global rate cut trend. The Fed's rate cuts have prompted other central banks to follow suit, leading to a global trend that is expected to continue through 2025, boosting liquidity and lowering borrowing costs worldwide. Investment strategy. Investors should adjust their portfolios. Growth stocks. These tend to benefit from lower financing costs. Bonds. Long-term bonds generally perform well in a rate cut environment. Commodities. Consider commodities as a hedge against inflation. Cryptocurrency. While volatile, cryptos may perform better in a low-rate setting. Conclusion. The Fed's rate cuts are likely to drive gains in stocks, bonds, and commodities. Investors should focus on economic fundamentals and adjust their strategies to take advantage of structural opportunities rather than relying solely on rate cuts.